Here's an IRS story that should get your attention. If your bank transactions exceed $600 a year, and I'm guessing that they do, the IRS wants to know about it. Treasury Secretary Janet Yellen is behind the plan that is slated to go into the Democrats' $3.5 trillion spending bill. Yellen says it's needed. Otherwise, $7 trillion in taxes over the next decade won't get collected. The plan also calls for $80 billion to hire 80,000 new IRS agents. Bankers and other industries aren't having it. Over 40 trade associations sent a letter to Congress saying exactly why it's such a bad idea. So what would it mean for regular Americans and for the financial institutions themselves? To answer these very important questions, we have with us Paul Merski, Independent Community Bankers of America, Executive Vice President of Congressional Relations and Strategy. Paul, thank you so much for joining us.
Glad to be with you.
So I'd like to dive right into this and ask you what exactly the new rules, if passed, would mean. What exactly would be reported to the IRS that isn't now?
Right. So the Treasury Department, the Biden administration, and Congress are looking at using the banks as a new reporting mechanism to the IRS on any inflows or outflows of your financial accounts of $600 or more. So basically, the banks are tracking all your financial transactions and sending in that tally to the IRS. And it would be on checking accounts, savings accounts, your loans, small business accounts, all financial accounts.
What percentage of accounts that you're aware of would actually end up being monitored under this?
Well, virtually all accounts would have to be monitored now because you'd have to track to see if you reach that $600 threshold or $10,000 threshold. So it's basically a dragnet, a blanket monitoring of your financial transactions during the course of the year, and then turning over that information to the IRS.
So you mentioned $10,000. That's because there is some idea floating around that that threshold could be raised from $600 to $10,000. Would that make a significant difference in your mind?
No, the truth of the matter is that the de minimis threshold, the amount that's picked, doesn't matter because you're measuring a flow. Even a minimum wage worker in this country with depositing their paycheck would go over $10,000 a year in deposits, and that would be reported to the IRS.
So how big of a burden does that place on banks, especially small ones? Because Treasury Secretary Janet Yellen said at an oversight hearing on September 28th.
Banks already report directly to the IRS the interest that they pay on accounts when it exceeds $10. And this is not a proposal to provide detailed transaction-level data by banks to the IRS. It is a proposal to add 2 additional pieces of easily ascertained information on to the 1099 INT form that banks already file, namely the aggregate inflows.
Right. This is not information the banks already track. Banks treat their customers very carefully when it comes to their data and privacy. This would be a sweeping new dragnet of collecting all this data and reporting it to the IRS. So it's not something that banks would do. And look, this is the same administration that said a $3.5 trillion budget bill will cost zero. So it's kind of a false advertising. Consumers really need to know that their personal financial data and information, regardless of your tax liability, will be collected and sent into the IRS.
So what would that look like for a bank?
Well, it'll be a massive investment in the billions of dollars of new technology, computer equipment, software programming, hiring staff to make sure that you're accurately reporting. And people's bank accounts and transferring money between accounts is very complex. People get married and then join the account. People get divorced and separate accounts. People are managing multiple small business accounts. People are managing, in some cases, their elderly parents' finances in their bank accounts. So The IRS is just going to get a lot of white noise, and there's going to be a lot of false positive of assuming everyone in the country is a tax cheat and that you have to monitor and profile all Americans. This is really a profiling of people based on their financial transactions. And when Americans hear about this, they won't tolerate this.
To your knowledge, were the banks consulted about this proposal?
The banks were consulted, and we had meetings with officials only after the fact, after this proposal was already published and working its way through Congress. So it's our job as a National Banking Trade Association to, sound the alarm bells, not only for the banking sector, but really alerting people of what's happening with their financial data and their financial privacy. We have a Fourth Amendment in this country where, you have the right to privacy with your personal papers, and the government can't just demand this information from the individual. So they're using the back door by going through third parties like banks to try to get your personal information that they can't get directly from you.
Secretary Yellen also said in a letter to the Ways and Means Committee that the objective of the plan is to help the IRS pursue high-end noncompliance by providing some information about opaque income streams that disproportionately accrue to the top. So it seems like the goal is to go after, the high-end tax evaders. Is that an effective tool for that?
Well, we hear this story repeated over and over again that we're just targeting and going after millionaires and billionaires, but this is a sweeping dragnet of everyone's financial accounts. When you're talking about setting a de minimis level of $600 or $10,000, it's going to sweep up everyone's inflows and outflows going into their bank accounts. And this is on checking accounts, savings account, small business accounts, your investment accounts, your loans. This is going to be a massive invasion of financial privacy with, billions of pieces of data being sent to the IRS. And one of our big concerns is the IRS has a horrible track record of keeping information private. They have a terrible track record of not using this data for political purposes. The last thing we need is everyone's financial account information being turned over to the IRS in a massive dragnet.
So we're just about out of time. I just want to ask one other thing. So if the IRS sees something that raises a red flag, what would it do next?
Well, the IRS is very powerful. They could freeze your bank account. They could subpoena the bank to deliver more detailed information on your financial account after they use this data to profile your account. They could garnish your account. They could seize your account. The IRS has tremendous powers, and there's often cases where people get audited and the IRS is wrong, and it costs the taxpayer a lot of money to defend themselves against these false audits. And with this blanket profiling, basically assuming every American is a tax cheat and snooping through all their financial data, there's going to be tremendous false positives and a lot of cost and waste and concern by small businesses and individuals if this proposal would go through.
Be sure to watch the entire episode, now available exclusively at epochtv.com, a new completely censorship-free premium subscription platform, brought to you by the Epoch Times. See you there.